Mr. L.V. Prabhakar, Managing Director and CEO of Canara Bank now joins us. Mr. Prabhakar, good morning. Thank you for joining us. I'm just going to use my monitor to refer to some data points here, and what I can notice is there are a combination of factors which have led to the loan growth. NIMS expansion, low credit cost, everything that could go right for the banking sector has gone right for 2022. But as you look into the future for 2023, do you think this kind of a momentum will continue?
As far as Canara Bank is concerned, Q1 and Q2 of FY23, we have given a good results as far as loan growth is concerned and deposit growth is concerned, as well as in terms of other parameters. And we believe strongly that this trend will continue in Canara Bank going forward.
The growth for the banking sector this year, I'm referring to credit growth, has been between 18 to 20%. Next year, will this kind of a number sustain, or there would be some issue because of base effect and PSU banks could lose out to private banks?
We adopt a principle called 55-45 as far as the credit growth is concerned. When I say 55, we concentrate on RAM sector, and 45 is concentrate on corporate credit. So we always concentrate on a 360 degrees growth in terms of RAM, agri, retail, and MSME, where we are showing a very good growth. For example, housing, consistently we are growing at 17%, and will grow at this rate going forward. And agri, we are growing at more than 20%, MSME more than 13%, and retail also more than 13%. So put together RAM, I think we are growing at more than 16%, and we will continue this growth. And in corporate, we are seeing a very good traction of about 20% plus. Canara Bank always tries to beat its own record. So going forward in the coming quarters, I think this credit growth is sustainable for Canara Bank. However, when we grow at a 20% plus or a decent double-digit growth, we should always be mindful of quality of the assets, which Canara Bank gives I can say, a strong importance to that.
Mr. Prabhakar, morning. Now your incremental deposit growth has been lagging credit growth. Banks were able to support this till now due to strong capital positioning. But how long do you think that will continue, and is there now pressure on getting deposits?
Credit growth, two things are required. One is capital, second one is deposits. Capital, as far as Canara Bank is concerned, in September quarter, we have seen our CRAR is at 16.51%. And Canara Bank could raise about 20,000 crores of capital in the last 2 years. So as far as capital is concerned, for the bank, there is no issue. And it can support a decent double-digit growth going forward 3-4 quarters, even if we don't raise any further capital. The second point is regarding the liability side. Yes, there should be a growth in the deposits. That is why if you see our rate of interest increase as on 7th of October, Canara Bank was the first bank to increase the deposit rate to 7%. For a senior citizen, 7.5%. And the early move, which we have taken on 7th October, has helped us in mobilizing huge retail term deposits, especially under scheme called 666 days. Now Canara Bank is showing a very good, decent double-digit growth in terms of deposits also. So going forward 2-3 quarters for Canara Bank, deposit growth will not be an issue. At the same time, credit growth also will not be an issue. We'll be having surplus liquidity in the bank.
Okay, so deposit growth is not going to be a problem. It's been growing in double digit, and as far as liquidity is concerned, it continues to be quite flush for Canara Bank. But you know, one thing Street is banking on this time around is that the asset quality is expected to be better in this cycle versus what we have seen earlier for PSU banking names. Can you talk to us about how this time is different than the earlier times, and is the assumption for better asset quality really realistic?
Let me talk about Canara Bank asset quality. We adopt two strategies. One is underwriting standards has to be the best, so that you will not underwrite any substandard asset or low quality asset or high risk asset. For example, for Canara Bank, if you see the risk weighted assets to the advances, over a period of time, we have reduced the percentage, and now it is hardly 63, 64%. And second point is proper monitoring and follow-up and taking immediate action whenever we see any stress in any of the loan assets. Now, these two things are handled very professionally in all the banks and more particularly in Canara Bank, because of which the NPA percentage, gross and net, has gone down substantially. Our net NPA is 2.19, which is going to be reduced to less than 2. We are working in that direction. And gross is at 6.37 as on September. And we are hopeful that we should bring it less than 6. And going forward, it should be a very decent figure. And we strongly believe that regular hand-holding of the borrower, proper follow-up of the accounts, and no compromise in underwriting the loan assets will definitely improve the asset quality going forward. And I think going forward, all the banks are going to have a very good asset quality, especially Canara Bank.
How do you see the ROA moving? Do you see ROA settling above 1% somewhere in 2023?
Our guidance was ROA will be 0.70. And in September, we have already crossed 0.79. And whereas ROE, we are going to see a very good growth. We have given a guidance of about 15%. We are already at 17.37. Now, coming back to hitting ROA 1%, I think in a few quarters, we will be in a position to achieve that.
What are the fundraising plans? Because right now you're comfortable with a CET ratio of 10%. But if you have to grow, you would need capital. Can you manage your 18 to 20% growth for next year with the existing pool base, with our existing capital pool base?
As I said, Canara Bank, our CRAR is at 16.51. Even common equity is at 11.14 and Tier 1 is at 13.40. And September, our net profit was about 2,525 crores. Generally, 80% of the net capital will be plowed back into our capital. Profit will be plowed back into our capital. So going forward with our own internal generation, the capital adequacy of Canara Bank will be sufficient. However, Tier 1 capital and Tier 2 capital, we are going to raise in the Q4 to the extent of 1,500 plus 1,500 crores.
Banks have been narrowing the gap when it comes to growth as compared to private banks. Do you expect this trend to continue when it comes to FY24 as well?
My personal opinion is both private banks and public sector banks are going to do very well. And both the banks in private as well as public sector, they are going to show very good growth in business because the economy is doing good. There is huge scope for lending. And going forward, we expect that the liquidity position in the market will also ease and deposit mobilization will not be an issue, maybe in Q1 of FY24. So I am of the strong opinion that all the banks in public and private sector, they are going to give better results than what they were giving earlier. This is my personal feeling.
Wanted to understand as well from you, sir, Mr. Prabhakar, as to what the outlook is when it comes to geography-wise. Which areas are leading when it comes to credit growth?
Canara Bank presence is about 55% is in the southern districts and 45% is in the northern districts. So naturally, the growth is widespread throughout the country and in various sectors. So you can roughly say that about 55 to 60% growth comes from the south and 40% comes from the north. But the growth is widespread.
And from the current growth of 9% in your deposits, do you think we can see an improvement given that the term rates as well have been hiked by multiple banks?
Two things I want to say. One is on 22nd, we have achieved a landmark of 20 lakh crores of business, where both deposits and advances have grown. And in advances, already we have shown a growth of 20% as on 30th September 2022. And deposits growth was around 10%. And because of this 20 lakh crores business growth, there is a very good traction in the deposit growth also, which I can say that the growth will be a very decent double-digit growth in terms of deposits also, apart from advances.
Okay, so that's the word coming in as far as Canara Bank is concerned. But Mr. Prabhakar, before we let you go, also wanted your take regarding Canfin Homes. There's a lot of uncertainty of what is going to happen with the leadership. There is a problem of attrition as well, plus quality headcount seems to be a problem for some of the PSU banking names. Can you tell us how the hunt is going in for the new CEO at Canfin Homes?
We are selecting CEO from the industry, from private sector, and the appointment process is at a very advanced stage. And within the specified timelines, he will be assuming the office.
Okay, so that's the word coming in from Canara Bank. They're quite okay when it comes to the liquidity position. They are targeting the ROAs of around 0.8, 0.7%. And as far as Canfin Homes is concerned, they are expecting that the new leadership will come into the picture very soon, because that is expected to be a re-rating trigger when it comes to the Canfin Homes stock, because a lot of analysts are talking about how that could become a potential doubler from here on as well. So that stock is also something which we continue to keep on our radar.